What's going on, everybody, and welcome back to the channel. In today's video, we're going to be reacting to some of the best and worst clips on TikTok when it comes down to day trading. You guys love the reactions, and honestly, I love doing them because guess what? They're fun, they're exciting, they're engaging. I get to react some of you guys' video, so I know some of the people that I react to watch me. And not only that, also I can give you some real advice or praise on some things that everybody does. A lot of times what I react to is things that traders all around the world are making, whether it's mistakes or good things, and you can learn from it. We can do all of that while keeping it fun. So make sure you subscribe, like, comment, guys. Make this the best trading YouTube channel out there. You don't want to miss it. So we can dive straight into reactions. We'll go back to the TikTok reactions because I love doing those. Those are all fun. 100% win rate. Let's see this.
100% win rate is what I had in the markets today using the best day trading strategy. Now all I use is fair value gaps and liquidity, but I use them very differently. As you can see, we currently have this singular bearish fair value gap after sweeping lots of sell side liquidity in the market. I don't short from bearish fair value gaps. What I do is I wait for the bearish fair value gaps to be inversed. Now all that means is we get a body of a candle above the bearish.
So here he's talking about inversion for value gaps. First of all, what I want to say is 100% win rate for one day, guys, is nothing to be flexing about. He's like, I had 100% win rate today. Well, I took one trade and I won one and lost zero. Like, come on, let's be serious here. It's a little bit just to get you to watch, but let's see the setup. I understand IFVGs very well. I use them in my own trading. And this guy, I believe, is one of the students of my good friend, Doji's DD, Ryan. We play soccer together, we're on the same soccer team.
Bearish fair value gap. So what we now should do is come up and take some sort of buy side liquidity resting in the market. And as you can see, we do that perfectly. But if you didn't catch this trade specifically, look what happens yet again. We create another bearish fair value gap in the market. So as soon as we disrespect this bearish fair value gap, what should we do? We should then come up and take even more buy side liquidity resting in the market. Now this is the 80% plus win rate model that I live stream myself trading every single day.
Let's go, bro. We're not joining your Discord, but it is a good entry model. Yes, I'll say it's a pretty good one. Now there's going to be a lot of fake outs in this. You do need to be careful which fair value gap you're trading off of and looking at high time frame point of interest. I understand we're watching TikTok, so it's really quick. It's only about a minute that this is going to be, but there's a lot more that goes into this trading than just simple, hey, inversion for value gaps, I'm gonna take the trade, and then boom, you get cooked, you get cooked, you get cooked. That's the biggest mistake I see you guys, beginners, make, is that you learn something new, you think it's gonna work every time, and you trade it as a pattern. You do not wanna take trades as a pattern just because you see a fair value gap, you see a VWAP, you see an EMA, whatever, you take a trade off of it. You want to take trades based off of high time frame, point of interest, and then a smaller time frame entry model that aligns with whatever the bias you might have or what price should be heading towards.
In trading, there's no magic indicator that's going to tell you when to buy and sell. So instead of relying on trading indicators, let me show you a strategy that actually works. Step 1, we want to wait for the first 30 minutes of market open to play out. This means waiting for price action to develop until 10 a.m. Step 2, we then want to identify and mark out key highs and lows. These levels will act as support and resistance when trading the stock intraday. Step 3, we then want to wait for a strong displacement to either side and wait for a retest of that level. Step 4, we want to wait for a strong confirmation candle and then enter in with stops below the break of structure with targets being high of day and above. And just like that, we're able to capture the whole move using this simple day trading strategy.
So what's interesting about this day trading strategy, you see a lot of things line up together at the same time. You see key levels such as liquidity, you see fair value gap, which he calls a displacement, you see a positive aurora. You start noticing a lot of this trading strategy, guys, there's a lot of the same commonalities that play a role. I do really like that he said to wait for the first 30 minutes because, guys, the first 30 minutes of the market are the most quote-unquote scary, the most volatile. A lot of traders, when a market opens, I need to be in a trade, and they get cooked really fast. I really like to trade myself from 9:45 to about 10:30, 11. Call those macro times that usually tend to give you either the reversal or the right move. So I really like what he said. Now, I don't know if his strategy works. You have to backtest that. You can do so at tradeflow.com. Little shameless plug. But yeah, I really like what he said in there.
Big
My
stuff.
boy
Let me
Steph.
save you the time. Crypto is the brain rot of trading. I do this for a living and I
Meme
still don't know
coins.
the purpose. Why are you putting your money there? If you're super rich and you got a bunch of money to throw around, go for it, bro. Forex is just the most mid thing ever. Scammy, sweaty, and it's just outdated. Why would I do this when some things on this
Totally
list are
agree.
better? And to those who don't know what lot size is, keep it that way. Options go here, no doubt. Short-term, long-term, controlling assets and using leverage to your advantage. I recently got back into it in the last 2 weeks. I've turned 1,000 into 12,000. And futures are obviously one. No one saw that coming. Checks every box and it's super easy to get into. That's why I teach people how to do it.
So number one, crypto. I would probably have crypto above Forex, honestly. Forex is by far like, bro, I don't know who gets in the market and say, I want to trade GBP USD. Bro, like, come on. Like I want to do something exciting. I actually do agree with the list. Options, you could make an argument it's number one. If you use them correctly, they're much harder to master, but the rewards can be much bigger than futures, Forex, and even crypto, honestly. Crypto I like just because there's different ways you can go about it. A lot of people hate on it because it doesn't make any sense. But look, guys, does it have to make sense? No. I totally agree with the list with Steph. Futures, again, arguably 1 and 2 definitely options, or futures, you can go with futures, I understand so, because they're so easy to actually look at. They're so easy to calculate the risk, calculate your position sizing, while options are going to be a little bit trickier. And honestly, like he said, I don't know what the fuck a loss size is. To this day, I don't know how much a loss size is. I genuinely don't know. You enter and hope for the best on Forex. Trevor makes 1.3 million. Talk about Forex and scamming, the previous post with stuff. He's trading Forex right now. Why are we wearing a ski mask inside, bro?
And yeah, about 5 minutes, we're out.
So I think that guy definitely made me at 1.3k. Look, anytime you see somebody trading with a MetaTrader, to me it's already gonna be an L. MetaTrader is outdated, do not use it. The guys put on a Profirm account, they made 1.3k. I think they added a couple extra zero in there in that clip. But why dude, this reminds me of those TikTok fucking live streamers, bro. The guys are all day long on TikTok live stream, ski mask or just whatever, scalping 2-3 points. Bro, can we fucking stop doing that shit? You guys are getting into trading, not to be there sitting down at 9 to 5. You get into trading, to make money, go enjoy your fucking day.
OTE is the only thing you need. You can teach the lowest IQ person on OTE because it's removing the PD arrays and it's levels 62, 705 and 79. When it hits the 62 level, that's it done. Stops at the 1, TP minimums at the 0. It's the most like a black and white entry. Like if you mess up on OTE, something seriously wrong.
So OTE is a Fibonacci retracement. You guys know I'm known to have mastered Fibonacci. I've invented the golden pocket and the TR pocket Fibonacci pulls. It's something that I use. OTE is essentially the 0.62, I believe, that ICT uses. For myself, I use the 0.66 and the 0.618. I call that a golden pocket, much more consistent. Now, he said you can just enter off of it. No, you always need to have some other confluences. It will work more often than not, but you need to have some other confluences to actually trade alongside your golden pocket. I use it daily. I recommend everybody should learn. I have a bunch of videos you can go learn. You go watch the one I probably made like about 2 videos ago. I made a strategy makes me $2,000 a month. I show you how to use the Fibonacci in that one. And yeah, definitely I don't know about the OTE, but Fibonacci, really great tool. I use it my way. I recommend you guys backtesting it and finding if you think OTE is better. Golden Pocket is better. To me, students have tried both. We all agree Golden Pocket is much better. Another W for UNC, another L for ICT.
This is how I made 16K trading US 30 New York Open. Okay, so first off, I went on a daily time frame and I found these lovely areas of liquidity right here that was swept. Equal lows, trendline liquidity, whatever you want to call it. This area of liquidity here was swept. I then dropped onto the 4-hour time frame where I looked for an area where a potential reaction could take place. Where was this area? This area was this level of imbalance right here. Price came, tapped into it straight away, and I recognized that overall we had been very, very bearish on US 30 and we needed a retracement. We needed a pullback with some bullish momentum. So what I did was I scaled into the 15-minute. I wasn't able to find anything substantial on the 15-minute, so I then dropped onto the 10-minute where I found a 10-minute level of demand. However, this level of 10-minute demand wasn't sufficient enough for me. So what I needed more confirmation on a lower time frame to get a better risk to reward. So I went onto the 2-minute time frame, and on the 2-minute time frame, if I quickly delete the 10-minute area, I found this lovely level of demand right here. Order block, whatever you want to call it, it's all the same thing. And we had a change of character right here. Price breached previous market structure, and we call this a change of character. Once prices breached those levels, we entered our long position right here with our stop loss just below, and we look to target these highs right here, okay? This level right here. And that is how I made 16K in 25 minutes on US 30.
Shout out to your Remy, that was beautiful, guys. When you take a trade, this is what you should see. Top down analysis, large time frame, give yourself a reason to go down the lower time frames, and more reason until it all lines up. You need to build that puzzle. He didn't see it the right area, he just looked for a different time frame to find a confirmation, and if he did find it, then he decided to actually take the trade. Guys, this is exactly how you should be trading. This is how you should be analyzing your trades. Top down analysis, I do this for all my trades. It's beautifully done. Now it doesn't matter what strategy you're using, guys. ICT, SMC, EMAs, all should be having some kind of top-down analysis.
This is the easiest trading setup that I use live on stream every single day when I'm taking a buy position from a support level. So as you can see here, we have candles moving down, but the bodies of the candles are getting smaller, indicating weakening. All I need is one candle to flip and close green. Okay, perfect. There's the candle closure. Next step is I need the current candle to create a bottom wick, and then when it flips green, I'll take a buy position. Perfect. So there's potentially a bottom wick. Yep. I'll take a buy position right here. My stop loss will go below the current candle wick, and my take profit will be at 20 pips. There's full take profit hit, and that is the exact setup that I use every single day live on stream.
I really don't like to trash out people's strategy, but it's just way too vague, guys. What is the support level? How do you identify those? Number two, we're literally just waiting for a candle to flip green. Candles flip green and red all the time. It's just way too vague for me. I don't really know the guy. It appears to work for him. I'm happy about it. 20 pips doesn't seem like a lot. It seems like it's one of those like really small, tiny scalp trades that works with a high win rate, but overall the rest of the world is probably not that good. I'll stay away from that. I don't really like what I saw there.
Oof. Okay, I'm gonna sell on gold. Entry was very, very late. Volume is insane right now. I'm not mad at it at all, but let's see what happens though. Yeah, I'm liking this rejection right now. I enter another position just to make up for that small loss. All right, so I have 2 positions on now. That's about it, and let's see what happens. I definitely like the volume on this trade right now, so I have a good feeling about this one. That P&L is going crazy right now. We're down 1K right now. All right, good push, good push. We're up 2K now. Just a bit more. Okay, I'm out. Let's go. Beautiful trade. Let's go.
Really nice trade by him. Maybe the entry was a little sketchy, but it seems he's like on the smaller time frame, so it's fine. He added into the trade. I wish there was a reason why he added into a trade. Usually when I size into a trade, if the chart is showing you like, hey, this is looking really good, you almost get a confirmation. It could be its own trade and then you add into it. Not the reason that he said, which was like, oh, to make up for the previous loss. I don't know if I really like that. It's kind of showing me signs of a novice traders that's worried about the previous loss, but a professional trader like myself, I can take 4 or 5 trades in a row. It's not going to impact my next trade. My next trade is its own trade. Should not have the variable of the way I'm taking a trade should not be whether my previous trade was a win or loss, because it's going to mess up how I trade. It's going to mess up my strategy. It's going to make me wrench trade, FOMO, all those things. But other than that, really solid. He had a tight stop loss. His entry was a little funky, but still very nice, positive risk to reward trade. So I really like it. And you know, seen this guy around the timeline a little bit, and it seems like he's doing great. Guys, if you want me to react, that should be it for our reaction video. If you want me to react to your videos even, just DM it to me on Instagram, put them in my Discord. Some videos you want me to react to, because they're funny, or you want some advice or feedback on, or that you saw on while you're doom scrolling all day long and you're not watching my videos, send them to me. As always, like, comment, subscribe. I'll see you guys in the next video.